Joke apart, we are in the second day of the conference. Looks little dull, but hopefully members will come. But we are very fortunate to have eminent speakers today among us. Today's session mostly physical. Most of the speakers are here. Therefore, it will be engaging, and we will have a lot of time to ask if any questions. Okay, stalwarts are there with us. And whenever you are getting time and opportunities, please have chat with our speakers. That will have two advantages. One, the speaker will be able to connect with us and able to modify his speeches and the session according to the taste of the audience. That is the one benefit. The second benefit is that all the speakers who come here for this year conference, immediately after reaching back, they are going to block my number. Okay, they will not accept any more calls. The number of times I disturbed them is so huge. Therefore, in that case, at least you will be able to connect with him. Therefore, ensure that you are connecting with him for any of our future purposes. With this note, I would like to end. Warm welcome to all of you once again to the second day of the conference. Let us all enjoy it together. There are a lot of raffles to be won. Last session is going to be taken out by our Rajya Sabha MB, Mr. Dr. Amar Patnaik. He is a part of the finance committee of the government in the parliament committee, and he told that certain special areas where debates or discussion is happening, those kind of questions also he will be able to field, especially how the virtual currency legislations are taking place, the discussion. That area also he would like to discuss if some of you want to know that what is happening around that particular subject. Wishing all you all the best. Thank you.
Good morning, everyone. Thank you, C. Santosh, for the opening remarks. So, good morning, everyone. Yeah, that's better. So, as quoted by Mr. Albert Einstein, like, the hardest thing in the world to understand is the income tax. And that's the open secret why we all came to Bahrain, right? As there is no income tax here. But it is rightly said that all good things comes to an end. First, VAT came to Bahrain. Then after that, there was an announcement made by Ministry of Finance in India regarding NRI taxation. I'm sure all the Indians living abroad, they have so many queries in their mind, like what to do, how to file the return and all those things, and which will have a direct impact on the NRI community. To answer all your queries, we have a seasoned expert from the field of taxation, who will share his valuable thoughts in the changing landscape of non-resident and foreign taxation in India. To us chartered accountants, he needs no introduction. Nevertheless, we have a AV to reflect his profile. So on that note, can we have his AV, please?
CA TP Oswal, Founder and Managing Partner, TP Oswal and Associates. CA Oswal comes with an experience of over 4 decades. He advises national and multinational clients engaged in a diverse range of businesses, including construction and infrastructure, chemicals, shipping, manufacturing, information technology, and pharmaceuticals. CA Oswal is and has been an independent director on the board of various companies. Currently, a member of the newly constituted Subcommittee on Transfer Pricing for Developing Countries by United Nations, Oswal was also a part of the previous 2 subcommittees. He has also been a member of several committees set up by the Government of India, Ministry of Finance, Central Board of Direct Taxes, and OECD. He is also a visiting professor at Vienna University, Austria, for teaching international taxes for LLM studies. CA TP Oswal.
So, ladies and gentlemen, Please put your hand together for Mr. T.P. Oswal. Over to you, sir.
Good morning, ladies and gentlemen. Okay. First of all, I must thank the Bahrain chapter of the ICAI for inviting me to be here with you, and particularly Mr. Santosh and Sharmila. And my experience was similar like others. I was trying to see to it that I can cancel the trip for various reasons, because every day you get from Government of Maharashtra and Government of India different conflicting circulars on the COVID situation. What will happen to the persons who are returning back to India? 7 days quarantine, this, that, all. But be that as it may, ultimately Santosh ji follow-up was so serious, so significant that I could not resist. I said, okay, let me go. Let us see what will happen. The subject of non-resident taxation, of course, is not relevant in Bahrain because you don't have tax here. At least for an individuals, in a near foreseeable future also you may not have tax. However, companies will not be able to sustain that pressure because from 2024, the global rules of taxation requires every country to have minimum tax of 15%. So including Bahrain, who have committed under the inclusive framework of the G20 OECD, that there will be a 15% tax on minimum corporate rate of tax. And if you do not, the consequence is very interesting. If you do not still want to levy the tax, there are two countries which are doing trade with each other, any type of business, the other country will levy the tax. So your right of levying tax goes away and somebody else will levy the tax at your cost. So no country can afford to ignore that. And therefore this is going to come to every country which are taxing any income lower than at 15%. There are some nuances which are still to be completed by the OECD on this subject, like your SEZs or special economic zones to which the exemptions have been granted for a certain number of years. And there, possibly by October next year, they will complete all the whole regulations on the subject. Once the corporate rate of tax comes in, countries like Bahrain, Dubai, does not need tax. That is the reason why they have not been levying a tax. They have so much of a revenue from petroleum and other sectors, tourism, etc. You don't need a tax. But what will you do? You have no choice. And once you taste the blood of getting the tax from the corporates, all other revenues cannot stop. You have started VAT at 5% like Dubai. Sooner than later, the zeal of taking more from the public doesn't go away based on the needs of the country. In India, we see this happening every time. We introduce some tax at a very low rate, gradually it goes up and up. And therefore, resistance at the beginning is very, very important. My subject for discussion today is not your taxation, because you don't have. But you have something to do with the home country. A lot of people, rate of interest in these countries are far lower like international rates. So rate of interest in a country like mine is higher. So people were higher rather. Now today, of course, we are coming very competitive. So therefore, non-residents generally put the money into India by way of a deposit. And they earn interest on that. Unfortunately, the development which have happened in last couple of years are so scary, particularly after 2015. We have got number of new regulations coming in the country And in case if you have got made investment in India or elsewhere, the consequences of those investment made by you, if you cannot explain how you have made investment into the country, whether it is by way of shares, by way of immovable property or by any other mode, then consequences are very significant. So therefore, my simple advice to anybody who has been doing activities with India, keep, as an accountant, I don't have to tell the professionals because our job is to maintain accounts and advise people on how to take care of the accounts. So keep the accounts simplified, explainable in such a manner with evidences wherever you are, so your job becomes simple. And 3 or 4 cases which I have particularly going to deal with those in a real life scenario subsequently when I come to the Black Money Act. But before that, one major change which has happened, and all of you know, non-residence taxation, residential status. If a person in India, if a person who is the origin of India or resident of India has gone abroad, settled or changed his citizenship later somewhere else, then the question arises is still whether can you be considered as a resident. In India we have 3 types of residential status. One is ordinary resident, like anywhere in the world. This is different from the world. We must know that the concept of ordinary resident and not ordinary resident does not exist anywhere in the world. We have. And non-resident, of course, all the countries, resident and non-resident categories everybody has. But we have an intermediary category, not ordinary resident. And there is a major change which has taken place. Everybody knows if you are in India for more than 182 days, you are a resident of India. If you are and if you are a citizen of India. If you are not citizen of India, then dual condition. 60 days in India plus 365 days in the preceding 4 years, you can become resident. That was an existing condition. And if you are visiting Indian, if you are settled abroad and coming back to India, you are allowed to stay up to 182 days so far. The change which has been made in the income tax law 2 years before is now a non-resident Indian who is coming to India is allowed to stay up to 120 days in case if you have got an income allowed, I am putting that term wrongly, loosely, you are entitled to stay up to 120 days if your income is below 15 lakhs in India. 15 lakhs taxable income. So therefore, if you have got an interest from non-residents external account which is exempted, which should not be counted. It is not part of that 15 lakhs of rupees. Very, very important clarification. Similarly, there are other incomes which you get in India on which you don't pay taxes. Those are required not to be counted. For example, becoming non-resident, prior to becoming non-resident, you had agricultural land in India because once you become non-resident, you can't buy an agricultural property. So therefore, your income from agricultural sources, that is not taxable in India, and therefore that also will not be counted. If you are a partner in a partnership firm and don't draw remuneration from the partnership firm, and partnership firm is paying you their post-tax income, firm pays 30% tax, and post-tax income distribution, that is not taxable in India in the hands of the partner, and therefore that also should not be counted in that 15 lakhs of rupees limit. So therefore, what is the condition? If you are in India for less than 120 days and income is exceeding 15 lakh, any amount, no problem. But if your income is exceeding 15 lakhs of rupees and you are staying more than 120 days, the whole of the income will become, Indian income will become taxable. You will not be regarded as not non-resident because hitherto the conditions were less than 182 days, we presume that you are a non-resident. Now here the condition is less than 182 days but more than 120 days, a third category. So therefore you will be ceased to be a non-resident but you will become not ordinary resident. And this is one of the major change which has happened that is dangerous. So, a person has to take care of that. So now earlier the conditions were simple. Now the condition of number of days stay based linked with the income has come in. Another criteria which India has grappled in a very recent past, that people were leaving India. More than 20,000 high net worth people left India, and they tried to take citizenship of the other countries. Reasons we try to find why. Because we have a regulation now created. If you are Indian citizen, not for non-citizen, and therefore becoming non-citizen was beneficial. If you are an Indian citizen who is not liable to tax, please note this term, not liable to tax, very important term, and that term has been defined. Not liable to tax in any other country or any other territory. Why we are using the word territory? Because we don't consider Hong Kong and Taiwan as a country. They are territories. Time will come now, we'll possibly, if America recognizes Hong Kong or Taiwan, we will also be recognizing. By reasons of his domicile or by residence or by any other criteria. Under the income tax treaties, we have the concepts of domicile, residence or any other criteria. So the same words have been used. And I'm going to come to that treaty aspects as well. So therefore, if you are a citizen of India and you are not liable to tax anywhere in the world, your case is one of that type of country. Bahrain does not have a tax. And I had occasion to examine Bahrain's the decree which says there is no tax on individuals. Bahrain levies tax only on corporates which are doing petroleum extraction business. So therefore, if non-resident Indian staying anywhere in the world, earlier there was no concept of deemed residency rule. Now we have brought in deemed residency concept. You will be deemed to be the resident of India if your income in that from foreign source, Indian source other than foreign source exceeds 15 lakhs of rupees. So if your income exceeds 15 lakhs of rupees, which is nothing, 15 lakh is what? $20,000. So therefore it will be treated, you will be treated as not ordinary resident. Now question is, I am not taxable anywhere. I have not come to India for a single day. I have been in out of country for more than all 365 days. Why more? All the 365 days, still I will be treated as not ordinary resident. You will not be given the status exemption of non-resident. It doesn't make any difference because in terms of taxability of foreign incomes are concerned, whether you are a non-resident or not ordinary resident, your world income is not taxable in India. But your incomes in India will become taxable, and certain exemptions and lower rate of tax which are available to the non-residents will not be available to you as a not ordinary resident. And that is a dangerous consequence. For example, the dividend income are taxed at a concessional rate of 20% for non-resident, and that concession will go away under the provisions of capital gains. Also similarly, that will go away and will be treated as Indian residents' income liable to tax accordingly. So this is one of the most dangerous part of the amendment. Now question is, what do you mean by not liable to tax? I am going to come to that later. So the Indian citizens and persons of Indian origin or OCI card holders, if they are coming to India, as per the old category, they were allowed to stay up to 182 days. But now, if you are staying beyond 120 days, but less than 182 days, our belief was we become non-resident, no problem. But now they said, no, you will not become non-resident because your income is exceeding 15 lakhs in India, taxable income, so you will be not ordinary resident. And consequence I have already explained to you earlier. Deemed residency. As I said, read these words little more carefully. I have marked something which is highlighted them. Notwithstanding anything contained in clause 1 of section 6, which we read earlier, whatever explanation I have given was with reference to section 6. Notwithstanding means it overrides everything, so therefore nothing is applicable. So notwithstanding anything contained in section 6, what it says, an individual being citizen of India. So if you are citizen of India, then it will apply. If you have ceased to be citizen by virtue of taking citizenship of the other country, then you will not be covered by this explanation. Having total income other than income from foreign source exceeding 15 lakhs of rupees, then during the previous year he shall be deemed to be resident of India in that previous year if he is not liable to tax in any other country or territory by reasons of his domicile, blah blah. This is the category of a person internationally known as stateless person. If you are not having any ownership of any state, you are not connected with any state by virtue of taxation, then you can be considered under this particular category. Lot of people, when they want to come and stay in India, hitherto the practice and planning was, come in India, stay up to 180 days. How to calculate is another controversy, we will not go into the detail. Up to 182 days, stay in Dubai, 75-80 days, stay in Spain, I am giving you examples, literally examples known to me, say 75-80 days, stay in UK up to less than 90 days, even though you have a house, you will not become resident of UK, you are not resident of UK, you are not resident of Spain, you are not resident for tax purposes in Dubai, and you are not resident of India. Stateless person. So therefore, once you are not resident of any country, the Indian government wanted to catch hold of such people. And therefore, they brought in this amendment, okay, you are not paying tax anywhere, pay tax here. But only in respect of Indian income. We can't tax extraterritorial jurisdiction, we don't have to tax their world income, but at least Indian income. So therefore, it is advisable to pay tax somewhere and take TRC, tax residency certificate from that country if you want to get out of these particular provisions or don't have any income in India more than 15 lakhs of rupees. So physical presence in a country to avoid becoming tax resident in such cases are futile now. So it covers only such people who are stateless, and therefore these provisions are dangerous. Even a single day stay, without a single day stay, you can become not ordinary resident or deemed resident of the country. The term not liable to tax, if you look at, has been defined this year under the Income Tax Act, last year. The person liable to tax means in relation to a person and with reference to a country, means that person, that there is income tax liability on such person under the laws of that country for the time being in question is, issues under the impact on the non-resident status under domestic law of the provisions. Now, how do you calculate this 15 lakhs of rupees income? Whether first you should calculate your residential status as non-resident or resident, because Section 5, Section 6 are the two sections. Section 5 says non-residents' income in India only is taxable, world income is not taxable. And Section 6 says how to make a person resident and non-resident. How do you decide that? So question is whether first Section 5 should apply or Section 6 should apply. Whether should I first decide my residential status and then decide my taxable income. This is circular, and therefore it can hit you both. My simplest solution to this will be first decide residential status non-resident, assume that you will be non-resident, and then decide what is exemption is available to you or not. And then therefore the circular, though it creates a problem, you can avoid that by way of simplifying the situation and make you a resident based on the income, make you deemed residents based on the income, if your income exceeds more than 15 lakhs of rupees. Next issue is if you are a not ordinary resident. Your world income is not taxable, but if you have income from business or profession set up in India, whether that business or profession derives income from foreign source, that also will become taxable, the exemption goes away. And that is another consequences which would arise. And as I told you earlier, certain concessional rate of tax which are available to non-resident, for example, dividend income 20%, long-term capital gain on unlisted shares at 10%, that goes away, and therefore you will become subject to tax like normal Indian citizens. And that is one dangerous area one has to be guarded with. The most important impact of this change, if a person is filing his tax return in India, he has not to disclose his foreign assets and liabilities if you are a non-resident or if you are a not ordinary resident. But if you are a resident, your incomes, your foreign assets are required to be disclosed, foreign assets of all types. Not only foreign assets, your signatory to the bank account of a foreign country also is required to be disclosed. Which country's account you are operating, in what capacity you are operating is not relevant. You are managing director of a company, and obviously you may be signing some authority to sign the return of income tax in India does not apply to not ordinary resident and non-resident. But if you become resident by any reason, then all the assets are required to be disclosed. And this has some consequences which I will take up little later when I come to other laws. Another important feature is once you become not ordinary resident, certain treaty benefits which are available to you continues to be available, but the rate of tax benefit on that will not be available to you. If in India you have a source of income which is available to you at a concessional rate of tax, that under the treaty the benefit is available. If India is a resident country availing foreign tax credit, those could be some complications. For example, you become not ordinary resident in India, foreign tax credit. If your incomes are taxed here, the other country may or may not give you foreign tax credit. These are the things which one has to check up. And lastly, if a person is a resident of India and also resident of the other country, you become a dual resident. And to avoid dual residency, under the treaties you have Article 4 of the treaty, which unfortunately your country does not have a treaty with India. So dual residency, if you are a resident of India and resident of Bahrain, you can avoid the dual residency by virtue of 4 tests laid down under Article 4, which says, first decide where your permanent home is, where center of vital interest is, second, in Seretium, third, where your habitual abode is, and fourth is where the citizen, your country citizen, which country's citizen you are. If all the 4 tests are in favor of, or one of the 4 tests is in favor of India, then you become resident under the treaty. You will not be able to claim non-residential status. Interestingly, Government of India had clarified, if you are a resident of any other country, then you become non-resident in India under the treaty also. And this provision can be taken advantageous under certain exceptional circumstances, and very interesting consequences come out of this particular interpretation of the tax treaties. So, I come to therefore important change for your country, and that let us see. Yeah. The Middle Eastern countries, we have 2 tax treaties with Middle Eastern countries, say particularly Kuwait and Dubai with India. The test of residency under Article 4 is not based on the other treaties conditions like by virtue of residence, by virtue of domicile, by virtue of any other criteria, does not exist. These 2 treaties say if you stay in these 2 countries for more than 183 days, you are resident of that country under the treaty, simplified situation, and therefore you will be automatically non-resident of India. And those 2 countries were giving liberally the tax residency certificate to a person who is staying in that country. But now Government of India, we have arm twisting techniques. The Government of India told Middle East, Dubai, at least I am aware of Dubai, they said, don't give TRC unless the person stays more than 183 days in your country. How do you do that? Now, if a person is a traveler world over, and he is settled in Dubai, and he is traveling world over, and is not physically present in Dubai for more than 183 days, the government of Dubai does not give a tax residency certificate, then that can create a problem. So therefore, tax residency certificate is very relevant. As far as impact on Bahrain is concerned, we don't have a tax treaty at all. And therefore, you will be governed by the same explanation which I gave earlier. You have interestingly, we found it out that you have a law in Bahrain which is known as Amiri Decree of 1979, Decree number 22, under which the term taxpayer has been defined. Taxpayer means a body corporate or establishment or a company subject to income tax imposed by law. So the above definition has a term establishment, but does not have the term individual. The company has been separately included. Establishment is there, but the term establishment is not defined anywhere. If the government of Bahrain decides to clarify, the establishment word internationally known as establishment include individual. So therefore, individual also are covered by our income tax law. Well, we are not levying income tax on individual because none of the Middle Eastern country except one which levies income tax on individuals, and therefore we also don't propose to levy. Then you will be treated as a resident of Bahrain because your law permits you to tax, and law also says you are not taxing because the clarification issued by the Bahrain. Possibly endeavor should be, if you want to avoid Indian problems, try to make representation to the government of Bahrain and get this clarification. That will resolve all the problem perpetually till the next amendment comes. So this is one important feature as far as Bahrain is concerned, because then you will be treated as liable to tax in Bahrain, but not taxable because of the certain other reasons. So this is one thing which is required to be kept in the mind, because this is a very recent change and the impact has started impacting number of individuals in India who are non-residents. It was a tax planning technique to stay abroad for 182 days and then come to India and stay for 182 days or 183 days, or as the case may be. And particularly, when we get the explanation from non-resident community coming to India, particularly from countries like UK, USA, and Canada, they say India has 3 seasons, 4 seasons, or 5 seasons. 3 seasons we can understand. 4th season is marriage season. So in the month of December, November, December, January, we come to India for marriages. And we stay because the weather in India at that time is an excellent, the weather in those conditions, and Europe and US will be severe cold, and in the old age people prefer to be less cold situation than the USA. So they'll prefer to be in India. And then, of course, sometimes mango season is very good in India, so people prefer to be in India to enjoy Alfonso mangoes, Langda mangoes, and all sort of mangoes. So therefore, 182 days is very easy to comply. However, now 120 days restriction is very difficult to do that. So this is one of the reasons why I thought this is one of the important topic. I should raise this and explain you the nuances of this particular provision. The recent changes which have been made under the income tax law in India. In India, we had dividend which was exempted from taxation. This regime, and unfortunately, it is professionals to be blamed. We started telling government, why you are levying tax on the dividend, on the companies paying dividend. We were having a classical system earlier prior to 1997. No tax, the dividends were taxed in the hands of the individuals at 50%, and the company paying dividend was only withholding tax. Chidambaram changed the law, said, and in fact the target was Mauritius, because people were taking advantage of Mauritius treaty, and India was not levying tax. Mauritius does not levy tax, both were non-taxable. So government of India thought very smartly, why tax dividend in the hands of individual at all? Give exemption. But company paying dividend must pay dividend distribution tax. Apart from the corporate rate of tax, they added a dividend distribution tax in the hands of the companies. This government changed that concept, because everybody started, sir, dividend distribution tax is an additional tax, 2 times tax. Companies paying tax on their profit, and companies also paying dividend distribution tax, double levy. So the government said, okay, we will remove the dividend distribution tax. And we go back to the old system of, classical system of dividend taxation in the hands of the individual. So they got the dividend taxation now, and there is no exemption. So the full rate of tax of dividend in the hands of the individual, and dividend distribution tax does not exist. So this has significant changes in the hands of the shareholders. The shareholders is now paying 35% tax on the dividend. Companies not deducting tax. Companies deducting tax. As far as non-residents are concerned, the withholding tax is lower. Resident individuals tax is 20%, non-residents 10% withholding. Advantage of non-resident in the countries where the tax is paid by them, that whatever tax the company has deducted in India, they get a credit. So literally they don't pay any tax. If the company in the country where they live, they don't levy the tax on their dividend. But a country like UAE, Bahrain, you don't have tax. So therefore, whatever 10% deduction takes place in India, that is your additional cost, and therefore this is your loss. So this is one advantage India derived out of dividend distribution tax abolition. Then, of course, if the countries have a tax treaties with India, some of the tax treaties prescribe rate of tax on the dividend. For example, recent tax treaty with Slovenia, Hungary, has 5% tax on the dividend. And if the company in India declares dividend, they are supposed to deduct tax at the rate of, say, 10%. If the recipient of the dividend says, I am beneficial owner, I am staying in particular this country, Hungary or Slovenia, 5% tax should be applied to us, and accordingly it applies. Countries like France, Netherlands, Belgium, Spain have very interesting treaties with us, which says, if India, that is known as most favored nation, under that concept, they say, if India levies lower rate of tax than the tax leviable under our treaty, then lower rate of tax will apply to us also. So therefore, those countries' rate of tax also gets automatically adjusted to 5%. So these are the advantages of the treaty provisions of some of the tax treaties which we have to see. And of course, the advantage is you deduct 5%, but you get a credit in your home country. So therefore, net you don't pay any tax. Can I get some water, please? Oh, I'm sorry. Yeah. I must give you some history of the Black Money Act. Possibly you must be knowing by this time everything because it is now 6 years old law in India. But started creating ripples recently. We enacted, as I said to you, from 2012 we saw exodus of Indians going abroad, settling abroad. More than 20,000 high net worth individuals are out from the country. And therefore government decided that we must do something. And it was a global agenda of G20 and OECD that government of every country have a right to tax and unearth the income which is not disclosed in their country. So with a view to follow that agenda and with a view to comply with that agenda of the OECD, we created most draconian law in our country. I have studied black money laws, or this is actually the law is known as Undisclosed Foreign Income and Assets into bracket Black Money Act of 2015. But that undisclosed part is significantly hidden. Today what we are calling this as a Black Money Act. Under this act, the reason why this act was introduced to catch hold of all the persons resident of India, if you have got and they have become non-resident, to get hold of their assets or income which is hidden outside India. At times it is possible a person becomes non-resident all of a sudden, say in 2021 and 2020, let's assume, and you are non-resident thereafter. But you have done so many deeds when you are resident of India. Sometimes what happens, you know that you have a foreign source of income, and those days where opening bank account abroad was, it was a pleasure. A banker from foreign country will come and convince you as a citizen of India, this is the best opportunity to hide your wealth abroad, hide your income abroad, we will protect you, and therefore you will not disclose this asset to India. Gone are those days. And now those same very bankers who are telling you that you open an account abroad, they are compelled to give the information to the government of India. And these are the consequences which let us see how to face this situation. When Government of India enacted in 2015 the Black Money Act, they enacted with a very good purpose that anybody who is non-resident not covered by this law. Non-resident not covered by the law at all. Not ordinary resident also not covered by the law. Only resident Indians having a foreign account and foreign assets are required to be covered by this law. 2 years later, 3 years later, the government failed miserably because all the people became non-resident. So therefore I said no exodus, so many people. The government then thought how to catch hold of them. What they did, they amended the law retrospectively. They say non-resident no doubt is not covered, but during the period when he is a non-resident, he is not covered. If you were resident prior to becoming non-resident and your sins have been committed by you, while you were resident, you have opened account abroad, you have amassed assets abroad, you have got foreign income abroad, kept in a secret account, not disclosed to the tax authorities in India, all this is liable to tax in India. All we can cover up under the Black Money Act. And therefore the law now requires you to disclose all those assets. This is a global agenda of making people pay tax on the world assets, world income of the OECD and G20. And India is playing very active role in that. I thought that only Australia, USA, Germany were very aggressive in OECD earlier. Canada to some extent. But now India is, though we are not member of the OECD, we play a very important role in convincing them that this should be. Because our techniques of doing investigation, you are a cyber security expert here speaking after me, so we should understand from him how the cyber security does. But how the income tax officer's mind works on the global agendas is worth learning and knowing. And they virtually persuaded OECD to change the laws which suits India, which also suits all the revenue officers world over. You know, what is the color of crow? Black. Whether it is in India, Australia or in Bahrain, crows are black everywhere. The revenue officers are black everywhere. Their thinking is in the same fashion. So when they come together, they talk the same language, and they found that this whole agenda of the OECD G20 helps them to get more revenues for the country, and therefore they all came together and started pursuing this agenda very vigorously. The consequence of this, if you are found to be having assets abroad, and please note Schedule FA which I told you, which requires you to disclose, if you are a resident of India, required to disclose your foreign assets, your foreign shares, your foreign trusts, your foreign beneficiaries, and if you are a settler of the trust, you have nothing to do but only settler details of that settlement. Your bank account signatories, as a signatory you have to disclose. And lastly, any other information, any other thing which gives you income from foreign source, not disclosed in earlier items, also required to disclose. So we have got very detailed explanation on that. So therefore, what is the law? Law says, if such assets and income is found during the course of any proceedings by the tax officer, it has come to the notice of the tax officer, he will issue a notice, and that year it will be deemed to be all the assets are acquired in that year, and you will have to pay the tax on that at the rate of 30% and penalty at the rate of 90%, and therefore total tax plus penalty is 120%, whatever you have saved, and that too based on the present value as on 1st April 2000, the year in which it is detected. Value will be taken based on the April 1st valuation, but the asset will be acquired and held by you later on. Suppose I may say, sir, I had opened an account, I have closed it. I now don't have any balance in that account. He said, doesn't matter, very well, no problem. We can find out what is the value of that asset as on 1st April, notionally, and pay the tax on that. So therefore, these are very significant consequences. And the next consequence will be, if the person has not disclosed properly, he is liable for penalties, liable for interest, and liable for prosecution as well. And these are most dangerous provisions one has to, therefore, one should, onus lies on you to prove that these are not your assets. Now sometimes you may say, I am a beneficiary of trust, but I have not created the trust. Somebody else has created the trust. I am a discretionary beneficiary. Trustees may not give me anything. The income tax department says, don't worry, we will tax it. Then it is for your problem to take care of that particular person, the trustee of that trust. And therefore, and these are the list of items which are required to be, some of the list of items which are required to be disclosed in your schedule assets in Schedule FA in income tax return in India. Anybody want to have more explanation? I can happily give that. So therefore, now the issue is, if you are a non-resident, but your deeds prior to becoming non-resident as a resident are now found to be detected, all the information will have to be done, the law will apply to you. Question arises is, you will say, sir, how do the officer come to know about my accounts abroad? I have closed the account. How do they come to know? Very simple. Now the global common reporting standard, CRS, has been signed by all inclusive framework countries, all the countries. So information exchange is on an automatic basis. You don't have to give the information to the tax authorities from the other country. If I come to Bahrain and I open a bank account in any bank in India, in any bank in Bahrain, I am thinking that, oh, let us open a bank account in a early United Bank, which has no presence in India. Nobody will come to know. No, nothing like that. This bank has to intimate to the Ministry of Finance in Bahrain that so and so resident of India, they will take my passport. Once the passport is taken, they will see where resident I am. I am resident of India. It is their duty to intimate the ministry that so and so person has opened an account with us. And the ministry's duty is automatically at the end of the year to give the information to the Ministry of India, Ministry of Finance in India. And Ministry of Finance in India shares that information to the tax revenue officers in India. And therefore, you may have a breathing time for 1 year, but then your name will come in the list of exchange of information, and the officer will issue a notice to you. Now you have seen so many leaks have started taking place. We have Panama leak, we have Mossack Fonseca leak, now recent leak is a Pandora's box leak. All these consortium of journalists have come together. They are hacking the information, they are trying to get the information, stealing the information, and then they are giving the information to the government of the other country. They are selling also at times. And therefore, these risks are always existing, and hence one has to be a bit careful about if you are becoming a resident of India, prior to become a resident, keep your affairs very clean. This is what my advice earlier I gave, and that continues to be. I just wanted to not bore you, but give the impact of this Black Money Act in relation to the three cases, very recent cases which have happened. One is this Yashovardhan Birla, Bombay Tribunal case, and in this case particularly, the person acquired huge assets abroad, but it was not his assets. And there was a search in his premises in say 7-8 years before, and there was a disclosure made in the search process also that I am a beneficiary, but I don't have, these are assets not belonging, I have not received anything, my maternal uncle has created the trust, and so far I have not received anything. Income tax department says, okay, fine, we can't tax it. Under the wealth tax proceedings were initiated, we had a law called as Wealth Tax Act, and that Wealth Tax Act was abolished, but that happened 20 years before. And then subsequently, he was found to have assets abroad, and Black Money Act was invoked against him, and he successfully defended himself before the tribunal, saying that Black Money Act should not apply because these are all disclosed assets to the tax authorities. By what reason I have disclosed to the tax authorities is not relevant. Having disclosed to the tax authorities in one reason, 1 year or the other, and I am subjected to the income tax proceedings in respect of this, the Black Money Act should not apply, and he was very successful in doing that. So, one consequence. Another consequence will be another case, you have worst case. Here, Rasesh Bhansali's case, and this is a very recent decision of Bombay Tribunal of November 2021, 2nd November decision. He made a lot of prayers. He was a beneficiary of an account abroad, a trust abroad. He was owner of a BVI company abroad, and then he closed those accounts, but the tribunal did not accept any contentions of his, and they says, I have explanation available. Tribunal says, nothing doing. Explanation should be to the satisfaction of the officer, and officer is not satisfied, therefore everything is liable to tax. There are 14 questions raised before the tribunal by one of the most eminent lawyer, and he lost the case. Reason being, if you take the proceedings very lightly when the search takes place at your place, he was interrogated for almost two days, and in those interrogation, he did not disclose anything. And thereafter interrogation took place for 3 months by way of continuously asking him the questions. He did not disclose anything. On the last day he disclosed. He agreed, and that was a fatal for him, and he lost the case. We have also third Delhi Tribunal decision in the case of Joginder Mehra. There he said that the taxpayer's name appears in the bank account, but that does not mean he becomes the owner of the bank account. His name was appearing, but he was signatory, but he said, I am not an owner, I am only signatory to the bank account. So luckily for him, the tribunal accepted the contention and he was relieved, and therefore it was benefit to him. So and the black money cases have started coming in the tribunal now. and High Court also. And therefore, black money case, so the history is only 6-7 years old, but the cases have traveled up to, and all the cases, we are defending some cases very large. The amount involved is much, much more than what these cases are. But those things one has to see the light of the day, and then we will try our best to argue the cases before the tribunal. We have also enacted, how much time I can take further? 5 minutes now? Okay, well, thank you. I'll be able to cover up very quickly. We have also law amended, and this is particularly relevant for people who are in India and setting up companies abroad, subsidiaries or otherwise. By doing everything by sitting in India, they create companies in Dubai, Bahrain, etc., and manage all those companies from India. The law has been amended in respect of companies' residential status. We say now a company is said to be resident of India, even if it is set up abroad, it will be said to be resident of India if place of effective management of that company is in India. Question is, what is place of effective management? Where substantial commercial and managerial decisions are taken. Where from? If the commercial and managerial decisions in substance are taken from a particular place, the place of effective management will be that country. And therefore, I set up the company, sometimes I make you beneficiaries, sometimes I make you managers, don't do anything, and directors, don't do anything, but I manage everything from India. Question will come up, how the tax authorities will come to know about it? When they come to search, they take your laptops, and they have cyber experts getting together, and they get your data, and your emails they track, and where from you have communicated. All this information, all digital world, everything is available on digital media. And therefore, there is a risk one has to take care of all these consequences very seriously. You have also in India a law like we have General Anti-Avoidance Rules, GAAR, which we had so far a judicial anti-avoidance rules coming in. But now India enacted under the laws of India, Income Tax Act, anti-avoidance rules from 2017 and started kicking. And in this, the definition is any arrangement, any impermissible avoidance arrangement is found. The government of India, the tax officer has a right to tax such arrangement, ignore the arrangement. If the arrangement is only to obtain the tax benefit, they can ignore it. They can even change the residential state of a person. They can even decide to change the location of that person, and that is all possible. However, the general anti-avoidance rule should not apply to any person where the impact of the tax in a particular year in aggregate taken together is less than 3 crores of rupees. As I said, India has, along with world, undergoing a change on exchange of information, and now we have one of the, we have this, I am on page number 22. We have exchange of information. So far, up to 2012, it was exchange of information on request. From 2018, the exchange of information became automatic, and therefore each country is required to exchange the information about other persons, other countries' residents very carefully. So whenever you open an account anywhere in the world, you give the residential address of Bahrain, the other country will exchange the information with Bahrain and not with India, because even if you have a passport of India, they will not exchange the information with India because you are not resident of India, you are resident of Bahrain, if that is evidenced from your bank account. So therefore, disclose as far as possible resident of Bahrain, so the information will come to this country, and this country does not have tax laws, and therefore people have no consequences of that. And with this, friends, I thank you very much. I have a last part on a Foreign Exchange Management Act, which I could not complete because of time, paucity of time, and I thank the organizers to giving me an opportunity and listening me patiently. If you have any questions, please I'm happy to take the questions. Thank you very much.
Yeah, thank you, sir, for such an insightful and impactful session. And thank you for opening our rusted mind in the field of taxation, especially income tax. We have all learned something new and special today. To conclude, I would say we should pay our taxes with a smile. Believe me, I tried it, but unfortunately, taxes hurt deals in cash. So thank you, ladies and gentlemen. Now may I call our past chairperson, CA Mani Lakshmanamurthy, to join us on stage to present a token to our speaker as a memento. While it's time for me to sign off, I will let my colleague CA Kansh Agrawal to take you to the next session. Thank you all. Have a great day ahead.
A very good morning, everyone. I am Kansh Agrawal. So we have an exciting session on cybersecurity now. First industrial revolution, people were really reliable, so we didn't actually need any protection. Second industrial revolution, our assets and business were protected by human personnel, human security. Third industrial revolution, our assets were protected by arms and ammunition. And in fourth industrial revolution, let me not spill the beans, so we'll find out soon. If fourth industrial revolution was a movie, then we will have AI, blockchain, and all of this technology as the hero, Batman. And then we have cyber threat risks as the villain, Joker. So, well, to help us stay secure in a metaverse, we have in our midst an expert on cybersecurity, a public speaker, a board member, and my colleague at KPMG, Mr. Hossein Al-Shidoki. So, without further ado, let's have the AV, please. The session is on technology, and we have some glitches in technology. Oh my God, I think someone has hacked BCICAI's architecture. What should we do, Hussein? I think we should install some antivirus. Oh, here we are.
Hossein Al-Shidoki, Manager Cybersecurity Advisory, KPMG. Engineer Hossein Al-Shidoki is one of the most prominent cybersecurity leaders in the region. He comes with experience in diverse sectors including public and defense, regionally and internationally. He is well known as one of the dedicated and esteemed leaders in the field of cybersecurity in the Kingdom of Saudi Arabia, bringing positive changes and wellness. He is internationally focused on information and operational technology security with a Saudi security clearance. He also holds advisory roles in various Saudi entities advising on topics relating to energy and education. Hossein Al-Shidoki.
Ladies and gentlemen, please put your phones together to welcome Hossein Al-Shidoki.
Thank you so much. Really appreciate it. Okay. Good morning, everybody, and thank you so much for hosting me here today. It's a pleasure to be here with you in Bahrain, flown all the way from Riyadh to here, just to speak about the topic cybersecurity. Are we good on slides? Just to give a little bit of introduction again about myself, I'm Hossein Al-Shidoki. I am an IT/OT Cybersecurity Associate Director at KPMG. I lead the energy sector as well as the defense and military sector in the region, Saudi. And I lead the operational technology services in Middle East. And we all know about the importance of the cybersecurity. It is always on the top 10 agenda at every single organizations that we see. And just to start with you today, I'd love to take you on a small example just to see how important the topic is. We all come from different organizations. We all come from different companies. It could be in financial sector, or it could be in oil and gas, healthcare, pharmaceutical. Some of them, they do have their production lines, which is basically, it's their own business. Let's imagine together, this is a corporate office. People are working, the business is running, some security layers are applied there. Firewall is there. In some cases, the security operations center team are sitting, usually in India, monitoring our organizations. And some organizations, they do have their cybersecurity team within their organization. And also, we do have our production line network. So this is the IT business network, and the other one is the process control network, where the production of a refinery is there, or a petrochemical or a mining is running, and it's segregated by a DMZ zone, or what we call a demilitarized zone, the 3.5 layer. There are some security controls there as well. We see in purple the dotted the dotted points, purple, those are IT data. Some of them, they might move to your production lines. And what we see in green is basically the OT unprotected data. OT is the operational technology. There are many attack vectors. It could be a phishing email to your organization, attacking your organization, or it could be a misuse of a remote access that you granted to one of your employees who's sitting somewhere else. Or it could be a removable media or a laptop that is not belonging to your organization, which you injected to your network. Or a programmable logic controller that has been misconfigured that could destroy the production which you have within your organization. And today I want to pick up on one example all the way through my presentations just to understand how this is really important. And we see so many executives usually are requesting a permission to utilize USB stick. Yes, it is a USB stick, but it might be infected USB stick, intentionally or unintentionally infected. And in our example today, we do have a contractor or an insider within our organization basically utilizing a USB stick, going to the engineering workstation and injecting that USB just to maybe copy some data or paste some data or configuration that he or she wants to utilize in the company. Then the injected USB already programmed with a code that will scan your human-machine interfaces, your historian where you're storing all of your data and you're trying to protect that, as well as the distributed control systems, where from there you're managing all of your production lines. Guess what? After the attacker have gathered all these informations, now he's injecting or exploiting another malware which is targeting basically the engineering server, where it's connected basically to the backbone of your organizations or to the core network, where you see here basically a programmable logic controller, where those programmable logic controller are automating your production lines. Let's say your production lines are pharmaceutical products, and this code is again scanning those PLCs, gathering the information, and next to the PLC, what you see here is the SIS, which is the Safety Instrument Systems. And basically the SIS, the main target of this control is to make sure that they understand the parameters of safety within your production line, because there are some high pressures within your organization or your production lines that you want to protect. Manipulating or modifying those systems could impact the whole production lines. You do have engineers or technicians running on the plant, and basically the code is manipulating with those parameters or those safety parameters and turning the high pressure with your production lines, and this is basically impacting your safety and the safety of the people just because of a small cyber attack. Now, the engineers and the technicians are impacted. The whole organization is going into ashes. The economy of your organization is going down and bad. The reputation of your organization and the stock market is going definitely down. Media are talking, CNN, Al Arabiya, social media, and everyone will know in seconds. And that's basically the importance of cybersecurity. You as a board, you usually want to own those threats. You want to understand those threats. You want to understand why is it important to my organization. You want to look at it from different lenses, considering, of course, the global standards like NIST, like ISO. You want to incorporate the cyber risks with the other risks that you are having with your enterprise risk management framework within your organization. For me, I usually like to do what we call the cyber bow tie. This is an exercise which I brought here in a smaller scale, just to do an exercise with you on how are we identifying cyber risks with organizations. You want to build and customize a cybersecurity program that goes with your cybersecurity, with your business, basically. What you should consider as a board in cybersecurity for your organization. Usually, the uncertainty are driving the demand of cybersecurity in the whole world. There are future of mobility, the transformation program, the local regulations, global standards, all of these are changing and demanding cybersecurity to be considered, and they're always on the top 10. We have seen this from 2016 all the way to today. I see usually cybersecurity within actually the top 5 risks and the top 5 agendas. And for you as executives, you should look at this from those 6 lenses. When we look at global standards or local regulations from Bahrain Authority, like the National Cybersecurity Center, we see those standards and regulations are basically looking from 6 different eyes. They're looking at it from the leadership and governance, where you consider the third-party risk management and how can you mitigate that. Let me give you an example here. Let me stop here. Maybe you are protecting your organization. You have all the security layers needed and all the protection layers are implemented. However, you're dealing with third parties. You're dealing with, yes, they are your trusted third parties. However, you're trusting their domains. But how can you assure that they're applying the security controls as you are? Sometimes a threat could be coming from your third party. And this is basically within the leadership and governance, you want to assure the risk from third parties are mitigated. You want to identify your critical data. You want to understand basically the ownership of the governance across the different data which you have within your organization by classifying those. You want to take the human factor in place, where you need to train your cyber team. You want to have a continuous cybersecurity awareness for all of your employees. And if possible, you need to customize those. You need to customize for executives, you need to customize for the operators, your specialists, and customize it with a background of finance, with a background of healthcare. You need to customize an awareness program for that serves and supports your business. The third, which is the information security management. You want to understand the cyber risks which you have within your organization. You want to build up your business continuity and the cyber resiliency to assure the continuity of your business during a cyber attack. The operation technology, this is always a must to be considered. I was just talking this morning to Mr. Rostal, the importance of ethical hacking and the continuous of conducting this. And basically, it's always going to improve. You will identify the gaps within your organization, but also it will improve the cybersecurity controls which you will put in place. And lastly, the legal and compliance. You want to be complied with global organizations like GDPR. You want to be complied with local regulations which you have in Bahrain, or if you have business in Saudi Arabia, so you need to consider the National Cybersecurity Authority regulations. And we see many global companies that are sitting in UAE or in Bahrain or even in the US. They need to comply with local or global regulations like from Saudi, because they're doing business in Saudi Arabia. Cybersecurity risk is like any other operation risk and maybe more. Why? Because it's pretty difficult to predict what's going to happen from a cyber attack. You need to always have a continuous cybersecurity assessment. You need to always identify the risks, identify the threats, identify the likelihood which you have within your organization, embed those risks with the enterprise risk management framework. In fact, you need to build a cybersecurity framework integrated with the enterprise risk framework which you have in place for your organizations to make sure the alignment is there. And that's something that you always need to consider as a business. Cyber bow tie is an example which I like to take for you, gentlemen and ladies here today. It's a simple example that we take usually to our clients. However, it's usually on a larger scale. But imagine with me, you do have one of your employees utilizing a portable media, a USB stick. And this is the cause, right? This USB stick is infected with a malware, and that's exactly the threat. The threat could be coming from 3 threat actors. It could be from hacktivists. It could be from a contractor. It could be a nation-state attack that are targeting your organization. What are those consequences that would come out from a malware infection? You could lose the control of your information or your crown jewel or your assets within your organization. You can no longer view your assets within your organization because of a malware infection. You also could lose the function or functioning your basically your platforms, your email address, your systems or your ERP systems just because of a malware infection. And this is where you need a continuous cybersecurity operations centers that they monitor basically 24/7 your organizations. And when we do the assessment, we even assess your security operations center just to understand how exactly are they monitoring. Are they exactly tailoring the use cases? And are they updating the use cases to identify such activities? There are likelihood reducing barriers which you have within your organization, or you might not if you are complying with local regulations. Those barriers are a firewall or an intrusion prevention system or antivirus systems that are protecting your entity. And those could be reducing barriers and reducing the likelihood of having this impact. But if this happens, and if the infection happened, you should always have a consequences barriers reducing this. And in here, you need to have a business continuity plan, and basically we test that plan. You need to have an incident response plan, and those teams, they should be always equipped with the right training, with the right exercises, where they are testing the environment and understanding how can they recover from an incident. And that's basically what is the cyber bow tie, that is a type of method that you should be taking to your organizations to understand the importance of cybersecurity and your readiness of cybersecurity. And when building a cybersecurity program, of course, you're going to be looking at this from the defense point of view, but also you want to enable your business. You want to have a resilient business that can continue under any circumstances. And in order to do that, you need to set the right target operating model that fits your organization. Build up your team that fits your organization. Train them. Make sure your other employees are having the right awareness. Have an identity and access management to basically manage who accesses what. Understand your asset. Many organizations, they do have so many assets, but they don't have the visibility of those assets. And this is a major threat. This is a major threat that could threaten your organization. You need to identify and classify those assets. You need to build up your incident response that fits the asset which you have within your organization. A continuous vulnerability management to understand the monthly or the weekly threats that might, or the gaps within your organization. You always want to assess your security operations center and your security operation team to make sure that they are basically having the right visibility and they are understanding the threats within the organization. Linking your network security architecture with the enterprise architecture is a must. Having the right privilege access management is also a must control that you have within your organization. Linking all of this with the governance and compliance to assure the continuation of the cybersecurity program is in place. And for you to understand this, what you need to consider, what we call a maturity assessment. Basically, you want to start building your program by assessing the current state of your environment. And you can conduct this by considering global standards like NIST framework or ISO framework. Know what is the security posture that you have within your environment. And by that, you can understand the crown jewels which you have within your environment. And then basically, by understanding the current state posture and the crown jewels or the assets that you have, you can build up the right defense layers for your organizations. And then you can top up that by a security awareness and education for your people and enhance your monitoring systems and enhance your monitoring and security operation team. And this is exactly what you should be considering as a starting point before building any cyber programs for your organizations. And as a board, what you need to consider, on top of training, also should always consider a cyber crisis management exercises on a yearly basis to test the readiness of responding to any incidents that might happen to your organization. Recruit a non-executive directors with a solid technical and cyber background who can set up the cybersecurity program for you. Have an external trusted advisor as part of your cybersecurity committee where they can provide you with all the advices and all the support to your non-executive directors. I hope this is beneficial today. I'm trying to minimize the technical tone to you, gentlemen and ladies, since you're all coming from a financial background, and I guess I'm the only techie person, and I'm trying to stay away a little bit from technical wording. So, thank you so much for listening to me. Thank you so much for having me this morning with you. And if you do have any questions, I'm happy to take any, whether it's with operation, technology, or governance, or legal, or compliance that is relating to cybersecurity. Thank you. Thank you.
Thank you so much, Hussain. So now we'll have a Q&A session. So I'm sure we have some tech enthusiasts in the room who would have some questions on how to protect their business assets. So we'll have a rolling mic if anyone else has any questions.
Here. Let's start the question and answer. So if you don't mind.
You want to ask something?
Yeah,
all right. So we have a first question from our secretary, Sthanu Murthy.
Hi. Good morning, everybody. The first question to you. When we talked about the last slide, I'm going to go backwards first. So when we started with the last slide, which talked, it's okay. When we talked about inclusion of non-executive directors and advisors, the advisors part is possible, but having a non-executive committee member or non-executive board member having technical background, especially that it's an emerging technology or area of emergence, it's not yet ripe out to the extent as one would want it to be. Getting the right kind of mindset, people with that experience is going to be a challenge. So though it's fine to advise, having it as a practical implementation has its own challenges. So what's the workaround in that situation? That's point one. Second point, having advisors leading the implementation is fine, but having the right set of people on the ground doing the actual implementation, because oversight is something and actually having it done is different. So in that circumstances, what's the skill set necessary for people in the IT department to be, so that they're able to make sure that their organization is cyber safe? It can't be 100%, but at least relatively. So I'd like you to answer these 2 points. Thank you.
Thank you so much. So regarding the first question, yes, it is very difficult to identify a non-executive cyber person with a solid technical background. It's been a challenging. The market so far needs, the global market so far needs 3 million people from that perspective. However, identifying, let's say, a potential senior cybersecurity specialist or a manager who can become that non-executive director is something that you should be considering. Of course, with the support from an external advisor who can boost that person to become that non-executive director is the right choice for an organization, because you're bringing basically a person who has overseen many implementations within your organization and can understand the technicality of that. However, he's not or she's not speaking the executive language. That's something that you can leave to the external advisor who can support him or her. I hope that answers both questions at the same time. Thank you. Any other questions?
I think we have next question from
Yes.
Shanawaz.
Thank you very much for a wonderful session. I suppose that's one of the best sessions I've attended, I guess, over the course of last 2 days. My question, I guess, from the perspective of the practical grounds, you know, the ERP, and then we have learned a new concept, I suppose, the ERP cybersecurity. Just share some of your practical experience, you know, how good these terms are in real term, because people are even struggle to, you know, adopt the ERP, and now we're talking about the cybersecurity ERP. And the other practical question is, we often have a problem, you know, when the server is based, let's say, in Saudi or UAE. So there are companies which work across the region. So how to deal, I suppose, that perspective, you know, when the server is based in Saudi and, you know, the operations are there in Bahrain as well. So this has been a threat as well. So how probably you see that from the perspective of the cybersecurity ERP as well. So thank you very much, Hussain.
Thank you. Great 2 questions. Let's start with the ERP first. Whenever you cannot bring cyber experts who really understand the ERP or the application point of view. However, bringing the right two teams from an application point of view or from infrastructure point of view, who both have an extensive experience in infrastructure and application, and involving the cyber expert from a designing point of view is always the right choice. You want to build up your ERP implementation with a secure design, considering whether a local regulations you have or a global standards, building your infrastructure and the architecture of the ERP system with a consideration from cyber since the beginning will ease the implementation and will make the compliance boost its highness. For the second question, which is having servers in for example, in Saudi and people operating in let's say India, that is acceptable. So what I have seen so far in most countries, as long as the data are not leaving the country and they're staying within the country, then the operation can be outsourced. Does that answer your question?
Extent, but I'm asking, I guess, from the perspective of, recent changes are happening in the financial services and the PDPL is just around the corner as well. I have seen the practical difficulties. The regulators are putting a lot of pressure that the data should not leave. And there are, specific fields they don't want to leave, I suppose, the territory, the date of births and all. So how to, I guess, tackle that issue when it comes to cybersecurity? But you answered it well now. Yeah, but I understand this is an upcoming issue.
It is becoming a challenge, especially if you're dealing with SAMA framework in Saudi. Data cannot ever leave the country. You can set the remote access from global. However, all the security layers, identity and access management, two-factor authentications, they need to be implemented in order for that person who's sitting outside the country to access those data.
Thank you very much. And
You're
I
welcome.
suppose Sunil sir has a question.
Can I ask a question,
Yeah, go
Mr.
ahead.
Hussain?
Of course.
Very good presentation.
Thank you.
Experience. I observed that one of the consultants advised us to go for the gold standard, one of the best cybersecurity equipment investment, and we made that investment $500,000 in the bank. After operating that system, another consultant came and he said that this still is not sufficient and you allow me to penetrate, attack and steal data from your servers and give me 6 hours window. And we actually gave them 6 hours window and he could steal the data from that. Then after that, whatever he suggested, we further invested money and made certain more changes, brought some IBM equipments, etc. Then the third consultant came and he told us the same thing, that allow me to create and I will steal data from your servers. So is there any gold standard in terms of equipments which will ensure foolproof cyber security, or the vulnerabilities will still remain in spite of any amount of investments? What should practically anybody do?
Shame on you, consultants. So basically, I wish there was a golden standards or a golden technology that we can invest in one time and just leave it and just focus on our business. However, we should always think cybersecurity is an enabler to your business nowadays. If you go back to the example which I put, which is the risk or the cyber risk bow tie, conducting a continuous risk assessment, understanding the threats, understanding the risks, from that point, you'll be able to know whether that threat or that vulnerability you want to mitigate or you want to accept or you want to transfer, just like any other risks. You can't always just comply or implement the security controls to close that gaps at every time. You want to continuously do ethical hacking, identify those gaps, see if you can mitigate those, see if you can minimize those risks, and this is how you should be thinking of this. There is no golden technology or standards, and I wish there were.
So in short, everything is hackable. Even the CIA architecture has been hacked in a lot of Hollywood movies. So, and thank you for that question. If no one is aware, so Sushil Jain, today is Sushil Jain's birthday. So if anyone has not wished, they can wish to him during the coffee break. And he is looking dapper in his band gala today, black band gala. Any more questions before we conclude this session? We have.
Hello, sir. Could you elaborate on the virtuals? How do you protect the virtual servers as well as the cloud security?
Again, there are some global standards and global regulations that are designed specifically for virtual machines and cloud machines. And if we look at, for example, the CCC, which is a well-known Saudi standard that were designed to protect cloud machines and cloud environments. Again, looking at the 6 lenses which I was explaining, you as a board member should be considering. Look at this regulations, try to map this regulations to leadership and governance, to operational technology, to human factor, basically by implementing firewalls, continuous monitoring. This is exactly the security controls that you should be considering for an for a cloud environment. Does that answer your question? Because there is no one solid answer to protect a cloud environment. There are a set of controls, and there are some global standards like from, as well, NIST, ISA, ENISA, or Saudi Arabian NCA, CCC requirements. Which should you considering from a governance point of view to be implemented within your environment if you want to deal with cloud?
Thank you, Hussain. Any last questions? Perfect. So that wraps up this session. Thank you, Hussain, for being here with us. Let's have a big round of applause.
Thank you.
I would request our past chairperson, Meenakshi Sundaram, if he's there in the room, to please come on the dais and present a token of appreciation to our speaker, Hussain Al-Shidoki.
Thank you. Thank you so much. Thank you. I hope you liked it.
I'm telling you, the world's first trillionaires are going to come from somebody who masters AI and all its derivatives and applies it to the extent possible and in a manner no one thought of. These are the words of Mark Cuban, the American billionaire. COVID-19 has been a course-changing era in the human history. It cannot be denied. It has lessons to learn for all the profession and the professionals. As businesses have learned the new digital and smart ways of transacting business with the integration of technological platforms, the role of audit has changed. Needless to say, this invariably includes doing audits using the artificial intelligence with the remote execution techniques, and accordingly, the role of finance and audit, specifically internal audit, has evolved over the period. The question is, what, why, and how artificial intelligence is going to assist us in doing auditing. We all are accountants and auditors, but we don't know how it's going to impact. To guide us through this, we have an eminent personality among us today, who is none other than the founder and managing partner of Mazars India, Karthik Radia. Can we have the EV, please?
CA Karthik Radia, Managing Partner, Mazars India LLP. Karthik Radia is a Chartered Accountant, CS, CWA, CPA, CISA, and CIA. CA Karthik is serving as Managing Partner in Mazars with a strong team of 25 plus partners and 400 plus team. Mr. Radia has over 20 years of experience in servicing large and medium-sized clients in complete suite of advisory services. He has advised clients in areas such as FRM, cybersecurity, forensics, automation, and corporate finance. Prior to joining Marzaz, Mr. Radia has worked with large accounting firms such as PwC, EY, BDO, and with WPP in New York. He has worked across sectors including pharma and healthcare, manufacturing, media and entertainment, IT and e-commerce, real estate, oil and gas, hospitality, banking and financial services, business knowledge process outsourcing companies. He is also a regular speaker at various forums and seminars of ICAI, ISACA and ICSI. CA Karthik Radia.
Ladies and gentlemen, can I ask you to put your hands together and welcome our speaker for the day, CA Karthik Radia.
So very good morning to all of you. And before I start, I want to thank BCICAI, the ExCom members, Bahrain chapter of Institute of Chartered Accountants of India, the organizers and the chairman for allowing me this opportunity to interact with all of you. For me, this is a kind of an eye-opener because it's my first visit to Bahrain. And there are some very, very important takeaways that I've got as a part of this interaction that I've had over the past couple of days with all of you. And one very important takeaway that I have is that you people, as Indian Chartered Accountants, have played an immense role in developing, through the finance faculty and profession, a very important role in development of the economy out here. And remember that finance being a lifeblood of business, a business cannot live without having a very effective and a strategic finance function. So the role that you guys have played, particularly a large amount of chartered accountants, and which I'm saying not just here in Bahrain, but across the spectrum in entire Middle East, I think it's quite commendable, very, very commendable. My estimates, based on the interactions that I've had with some of you, says that there are about 1,000 Indian chartered accountants out here, which is the largest population of CAs out here in Bahrain. Add to that another maybe 500 other qualified finance professionals from some other domains like CMA, CPA, and CA from England and Wales. I think roughly about 1,500 to 2,000 overall finance professionals in the country. So therefore, this group here out here, which is a part of the senior management or maybe at best maybe middle management of a finance function within various companies, is an elite group, is quite a representative group of the finance function in the Kingdom of Bahrain. And I would have never, but for this opportunity, I would have never ever learned. I've heard about it, but here is where the live experience acts very much different. So thank you for that. Before I start with my session today, just to lay down the context, and as I said, this elite group is a quite representative group of the finance function in the country. My fundamental and a very basic question that I want to start with is, why should we at all discuss the topic of artificial intelligence and various other emerging technologies to start with? Why at all should we be discussing about it? And that's my very, very first fundamental question. Why should we be discussing about it? And before we answer this question, here to this representative elite group, I want to ask another question which will help us to answer the first very question. How much as we as the senior management, as the maybe even middle management, how much of the time we actually spend in repetitive, mundane, routine activities and processes out of the time that we have? While I have the answer in my mind based on my various interactions that I've not just had with you, but across, I would like to just go across and start with this very basic question. So how much, I at least need 5 or 6 answers from you people, because as I said, this is quite a representative group. So how much of the time in a company when we are performing our role as a finance function, how much of the time we as a department spend on repetitive, mundane, routine, periodic activities like compliances, like MIS preparation, like financial statement preparation, like filings, etc. How much of the time? Any thoughts? If I can just get 5 or 6 quick answers. How much of time? 75%? Am I correct? Any other? 80%? Any other answers? Yeah? Any other answers? So I think the answer that I'm generally getting is upwards of 75%. And that is also my understanding about the time that we spend on repetitive mundane activities. Right? Now, my second question, again, these both questions I'm asking to answer the first question that I had. My second question is, given an opportunity that we may be given, if you guys were enabled to free up yourselves from the routine, transactional, daily, periodic activities of reporting, etc., if you had more time, let's say the 75% can be relieved, maybe at best 25% can be spent on routine activities, and if 50% is relieved out of this 75%, which will give you more time at your disposal, will you then want to spend this time on some strategic, high impact, very, very strategic and high impact intuitive areas like financial modeling for new projects, like ROI evaluations, like go, no-go for various projects? Would you like to spend more time on doing that? Would you like to spend more time on interacting with other functions and try to understand business a lot more better if you were relieved out of your daily, routine, repetitive, mundane activities? By and large, the answer is yes. So basically what comes out is that a very large part of your talent, a large part of your manpower, skilled manpower time is actually going in repetitive activities which are rule-based and which can very well be performed, maybe not by juniors, but if machines are fed well with the kind of intelligence artificially, then that will really help you to do your job much better, your function much better. And that right applies also when I say finance equally in the auditing world as well. So this was my first question, and the 2 follow-on questions that I had. How much of the time are we spending on routine activities, and how much of the time are we spending on mission critical projects, strategic projects, etc.? And I think you guys have answered that quite well. And that lays the foundation for our today's session. And I come back to my question number 1, the first very fundamental question: why should we be discussing? We should be discussing this because it is a real high time for us as finance and auditing professionals to be really deliberating as to what are these technologies on artificial intelligence, how is it going to impact us, what is it going to mean, how it can be leveraged and deployed, what are the risks, and what are the other elements involved. So now I come to the other 4 follow-on questions that I have, and then the question is, have we as, I hope you can hear me, have we as auditing and finance professionals kept pace with the evolution of technology and its usage when the word technology itself has gone through a very big metamorphical change? Because there is not one technology. Remember some 20-25 years back when SAP came in as one of the business applications, it came in as a system of records, single source of truth, Every transaction gets into the system, and everything can be available in the system, but you needed human beings to enter the transactions. But when that came in, there were hardly few technological options. Today, the technological options are wide range, very, very complex, large amount of choices, right? Have we really kept pace with the evolution of technology? And my blunt answer to that question is, and you have answered this, right? Most of your time is going in routine activities. I bluntly say that no, I don't think we have kept pace with the evolution. And when I say this, I have a relative example of business. Businesses today are thriving using technology. You call all the technologies, and these are not buzzwords, but you say IoT, blockchain, various technologies. There are many, many businesses, even the very basic data, availability of data and aggregation. You take back in India, some of the very, very large business models, the recent ones, whether it is payment technologies like a Paytm, whether it is Nykaa, whether it is Zomato, we really had a good run through the IPOs recently. And this is the best example. Basically using technology and the data, how these business models have changed, how the business is using it as a key driver. But have we, as finance professionals, auditing professionals, understood this? Answer to this bluntly and probably is that it is not really. Do we adequately understand these technologies that are transforming and disrupting the businesses? Do we understand what are these technologies and what are the implications for the future? Again, I sadly say that not so much or not really. Are we adequately leveraging and utilizing AI into auditing and finance functions and processes to improve our role, quality, performance, coverage, and insights? And I want to ask you this question. Are we doing that? But I can tell you, there are many progressive finance functions back home in India and across the world. People have really started using some of these emerging technologies like RPA, data analytics, and various other things. Many of these are integrated with your core mission systems and legacy systems like SAP. Many of them are using and doing that. And I come to my last question for today, which is a very important question. And again, I want this answer from you guys. Is it that these technologies are going to replace our role? Is it going to replace our role that machines, and there's a common myth across, very, very common myth across, very common insecurity and a fear across, that these technologies are going to replace human jobs. They are going to replace our function. Everything will be online in the blockchain, the third-party ledger systems. Every transaction gets automatically validated. Is there a need to completely replace the human function and will become jobless? Or maybe the need for auditing will go away. People tell, oftentimes people say that with the advent of blockchain, there's not going to be any need for auditing. I'm sure you would have heard this. I've heard it several times. But therefore, this fundamental question, what do you guys think? Is it going to replace us fully? Are the machines going to take over? So let's go back in the era when the computerization came in. Many of you may be there in that era, like ever since 1990s when computerization first came into India. We had various public sector banks which moved on to computerization. Many people went for strikes, public sector officers, they went for strikes and they said, oh, we can't work with computerization, it's going to take away human jobs. Has that happened? On the contrary, with these systems like core banking systems, SAP and some of these systems, the record keeping has got scaled up. It has allowed business to scale up. Businesses have grown. Most of the balance sheets of the public sector banks in last 20 years have gone more than 20, 30 times. It wouldn't have happened without computerization. Big technology giants like companies like Infosys and various other companies back home wouldn't have come up had we not taken that step. And today, let me tell you, with that as a step, and with, of course, at that time, the government giving a lot of tax holidays to technology companies during those days, has enabled some of these technology giants to come up. And today, don't be surprised, even in the accounting and auditing profession, and all of you know this, most of the larger firms have nearly 25 to 30% of their staff, global staff, sitting out of India doing some of these audits across the globe. It wouldn't have happened. The kind of growth and the scale in Indian economy wouldn't have happened. And with that as an example, in my view, machines, we are still talking about artificial intelligence. The natural and original intelligence here, that needs to be fed into the machines. But it is going to be here. As and when you give up the rule-based intelligence to machines, it will free up our minds to basically focus on some of the real strategic high-impact areas for which there are not many insights, for which the problems are very unique, and they have to be really be analyzed in the context of various other external factors. And that is the role that a finance function can very well play if some of these routine activities are given away to machines. And I come to that second part of this question itself. Is blockchain going to replace audit? Friends, I'd again go back a few years, about 2,300 years ago. The need for audit actually has emerged from India, those times where we had Arthashastra, Kautilya Chanakya's Arthashastra, and need for audit of the kingdom was very well spelt in the Kautilya's Arthashastra Niti. And if it was there 2,300 years ago as a concept, as a need, it happened, it was delivered. If now, even after so much of computerization, if we are still performing audit, the need and context of the audit is still there. The ways of giving assurance has changed because you've got IT as a very important component within audit. You've got IT general controls, application controls, cyber security audits. All of these have come as a very important component within audit. So the means of giving that assurance, giving that assurance is going to change rapidly. The need for an audit is not going to be given away. You will always need an independent assurance. So with that, let's just, for today's session, let's just very quickly understand that what we want to do. It's about how, why, and what about artificial intelligence in the finance and auditing professions. In short, we call it as AI in ANF. ANF stands for Auditing and Finance. Short topic. The objective of this session is to narrow down the gap that is existing today between technology and these functions. So we want to bring them a little bit closer, and let's try to do this as a part of this session by understanding a little bit more in details. So friends, I say always this, artificial intelligence is still artificial. What does it mean? This is a complete landscape of an artificial intelligence. You call it whatever. You call it machine learning. You call it deep learning. Okay? And you call it in various forms. Ultimately, this is the complete spectrum of artificial intelligence. And I always say this, it always starts with data first. And you pick up some basic business models. I call them as basic business models, although they have got a huge IPO run rate recently. But let's say Zomato, Uber, or Nykaa, or whatever these are the models that are based on basic data and aggregation. So, because there is a huge and large volume of data, can we understand this data first? Can we make some sense out of this data? And using various, and when I say data, there are various technologies, very, very cheap and open source technologies also, which can actually take your data from your core business legacy system like SAP and can actually tell you and give you some phenomenal insights. that will help you to take certain decisions, the core business decisions. And I say, whenever you talk about or whatever you want to learn about artificial intelligence, it has to start with data first. So that is data first, and there are various models here. After understanding, there are predictive models, there are prescriptive models, sensitivity analysis. What if you change your price based on the data of the past? What's going to happen if you change the price? How is the revenue going to behave? How is the profit going to behave? And this can be very, very close to accurately predicted. Coal price, very simple thing. A coal price, one of the models involved coal price simulation, and just 15 years of data across India, which is available, by the way, in the portals. If you take this data, it will tell you when to order coal, when to buy coal, what prices are the right prices, when the prices are going to fall. Just 15 years of data. And let me tell you, these are actually prevailing models today. Various large companies and large business houses which uses coal, they use these kind of models today using data. So that is data first, and I call this as data analytics, machine learning. Second is natural language processing. I don't think it needs any more explanation, but the basic emails that you get, auto emailers that you get, let's say you write today to an email to Oman Air or Salam Air or Gulf Air, and based on your email, they give you a standard response. Very, very standard response after reading that. These are called natural language processors. The second layer after data first in the entire spectrum in the journey of artificial intelligence. The third one is where actually the elements of artificial intelligence takes over. Because beyond data or beyond natural language processing, here is where you are telling the computers to perform certain processes and activities. And I'm going to today, if we have time, of course, I'm going to take you through some case studies of how RPA has actually helped. So your business processes are going to be performed by machines. And what are these business processes? Today, what do you do? For example, let's say for preparing a purchase order or for closing the books, what do? You go into SAP system. I'm just giving an example of an SAP. For that matter, you take any other ERP system. You go into the system and perform certain steps, procedures, and workflow. For doing that, you have learned that, right? You have learned how to do that, and through the workflow, you do this transaction processing. Let's say a payment, let's say an invoice booking or any other kind of a transaction. That can be done by an RPA. So an RPA bot can actually log into your system, can look at which are the outstanding invoices which have to be paid, what are the credit limits, whether have you received the materials and services, and if these payments are due, are there enough bank balances, can we process it, and it will go and do the processing. That is an artificial intelligence through an RPA. The first very element, and when I say this, first very element in artificial intelligence, and when I say this is for business processes that we all out here need to understand. Outside of this, RPA performs surgeries, RPAs perform driving of cars, robots perform even cleaning exercises, through the drones, they can also move and travel. So RPA for business processes is what we are talking about. And there are also examples of industrial bots on manufacturing systems, but those are also the examples of RPA. So that is RPA. Friends, let me tell you that today RPA has gone to a level because, when you were human beings, you had to go into the system and follow the set process. Why? Because you don't know database language. You are not a technical person. You had to log in through the database. Every entry that you make in the system goes out and sits into the database. Let's say SAP S/4HANA. HANA is the SAP database. Everything will sit within the database. Every accounting entry, every transactional entry will sit into the system. But you can't directly touch the database, and therefore you have to move through the application, set process and set workflow. That's a process-oriented exercise. In an RPA, which can do that by logging into the system, there is a belief that is emerging that the legacy systems can easily be replaced. using an RPA. Because what is you using SAP are actually writing entries into the database. If RPA can understand what you want to do and the transaction is appropriate, and RPA can itself go and write the transaction to database, then you don't need business applications. That is one very important emerging view that is coming up. Presently, people are using RPA on the top of business applications, but a view that is emerging is that it also has a potential as we go to replace processes, to replace your core legacy applications. Now, where is the need for replacement? The need for replacement comes because the original thinking goes is, let's follow step-by-step process and a workflow. That over a period has become, because as the processes have become complex and more complex, the business process experience has undermined. The business experience has gone down. People are not enjoying the experience of a business process, a very bureaucratic step-by-step business process. And therefore, a thinking that is emerging is, let RPA do all that processing. Just tell RPA to do what needs to be done, how it needs to be done, it will do it. You don't spend your human talent on doing some of these activities, and you don't spend on the business applications. And this can very well be done. Let me tell you, technically it can very well be done. How it will evolve, we have to see this. So that is RPA. The fourth in the order is conversational artificial intelligence. It sounds like real buzzword, sounds like very fancy, but let me tell you, it's something very basic. Like we have a process RPA bot, we have something like a chat bot that can actually work alongside human beings. It can understand speech, it can understand vision, and it will help you to work alongside machines to give you that experience. Basically, it's a experience building exercise. And earlier we had the systems like IVR, something on the phones, the machine used to respond to you. This is just an extension of that to basically, if you were to speak to a bank, and it will tell you exactly on your credit card details, it will tell you what has happened in the past, how much of your expenses are going to become due, when is your next insurance premium going to become due. If you are an insurance customer, it will tell you on the interactive device, it will tell you, how various changes either on the day, age, or amount of coverage, how would your premium change, etc. Everything on a very, very interactive mode, and that is conversational artificial intelligence. Typically, it is a very self-learning exercise. It will continuously build on what learning it has already got. There is a business case here to replace thousands of your call center employees. And why there is this business case? Because A, you are standardizing the response. Thousands of workforce on a call center cannot give a standard response, ever. Irrespective of the amount of training that you are going to give, people are going to change, there is going to be attrition, and you're not going to give the customers that experience through such huge customer force. And one chatbot can help you replace thousands of workers and give much better experience of response, much accurate and much standardized. So therefore, there is a business case and huge savings on cost. Now, at one side, with a very narrow thinking, it gives me an understanding it's going to replace 10,000 jobs. But it is giving those people an opportunity to basically go back and learn conversational artificial intelligence and work alongside artificial intelligence in the form of conversational AI, learn that and work alongside machines and see, because while answering to the customer also, you will need certain data points, etc., which the conversational artificial intelligence will give you. And the two together works brilliantly well as we stand today. Machines will never ever become so much intelligent that it's going to take over human beings. That's never going to happen, because every time new or other things will evolve, emerge, and the rules have to be changed, and human beings are needed. Expert systems like IoT, chain, these are real expert systems. And let me tell you, they also integrate very well. Like IoT will tell you the amount of production on a daily basis, right? By being there, you don't need a human being, but IoT will capture, including your temperature, including your readings. It will capture all of this information. It will capture temperature, air conditioning. You know this, right? By this time, we already have IoT, air conditioners, refrigerators, and things like that. And those are the systems, expert systems for business. VR, AR, again, have you gone through this experience of AR, VR, let's say a retail shop, right? A retail shop, being into a retail shop, have you gone through an AR, VR kind of an exercise where you, in a trial room, which is an AR, VR enabled trial room that tells you by wearing certain dresses, how do you look? Not just by always wearing it, but if you were to wear it, how a person, which is me, how is it going to look? How is it going to walk? And all of this can be experienced through some of these stores. So you have physical stores, but you also have in those physical stores the virtual trial rooms. And this is just one example. There are various other examples. Today, on most e-commerce sites, you can actually look at, let's say, by sending your images of the drawing room, the person can come in and give you that this is how your drawing room will look with certain types of colors, furniture, certain other equipments. How is it going to look? So that is an AR, VR experience. At times, an AR, VR experience is much better than the live experience. You know, I have seen various experiences on, let's say in an office, there are people who would, you know, finicky about their table and various things. I have seen certain, certain stars and not celebrities, but even certain other people, high outlook people, who would go back and cut the table that they have built for 20 to 30 times before they get what they want. None of this is needed actually if you have an AR, VR, 3D kind of a tool that will help you to take that decision. Now, therefore, with this kind of artificial intelligence and the landscape that is there, what is the role for a finance function? What is the role for an auditing function? So, as I told you, that auditing is never going to be replaced. And what is the evolving role for an audit? Like earlier when you had SAP system, you went through SAP application control audit. You went through IT general controls audit. You went through cyber security controls audit. Now it is going to be about fitness for purpose. Are these technologies performing what they were supposed to perform? Are they fit for our purpose? It's a fit for purpose role about the usage of technologies, effectiveness of usage, controls, governance, and security of AI systems. This is going to be the evolving role of an auditor who is enabled with artificial intelligence. And therefore come to the finance role. The role of a finance professional is going to be more around ROI evaluations. I think we are doing that today, but it's going to be a lot more structured, a lot more data driven in the times to come. And the go, no-go decision on various projects that you may be implementing, you need to get as accurate to the evaluation as possible by building up your ROI evaluation models. So ROI evaluation, cost effectiveness of the technologies, which technology is more cost effective? Because combination, you have one suite, like SAP is one suite, you get many of the things on business application in one suite, but you've got various components which are also very experience driven, and they do, at times, some individual components do much better job. Let's say payroll. A payroll application from a very specialized vendor can do a much better job than a payroll within a large ERP system. So, cost evaluation of various technologies, opportunity cost. Either if I invest money here, I cannot invest money in some other area. What's the opportunity cost? And what's the cost of not implementing the technologies? That's the core. If you don't implement this technology today, what's the cost? That should be the basis of decision, because if we would not implement this technology, maybe somebody else is going to implement and just going to take away the market share. And we have seen various examples. So that's going to be the role of a finance professional and the auditing professional. Does it make sense, guys? Any thoughts, any ideas so far? Any thoughts, guys? Is it making any sense? Any other thoughts? We will definitely cover some elements, but I'm sure the whole thing cannot be learned in a 1 hour session. But yes, there are some very beautiful, important courses on data analytics, on RPA. A lot of times, have you guys heard about a no-code platform? Anybody who has heard about no-code or a low-code platform? Do you know that there are small kids out there who are made to learn, you know, that Whitehead Junior coding platforms, kids are made to code. You know, at our levels, one of the very much emerging things is low-code platforms, means you can write a code. Let's say your email systems, you've got 500, I get more than 500, 600 emails a day. I can't respond to every email. And for responding to email, you know, there are some standard responses, and you know, basically if you feed rules, it will do things automatically. So, if I can write code for myself, and you guys can write a code for yourself, low-code platforms means you just have to tell the system in various forms. They're not very heavy program coding languages, even at times by even conversing through speech, you know, the codes can be written. And you know, some of these capable and competent, you know, bots are there, which are in the form of low-code platforms, but I will address that. You know, I can share that also, how to learn about this. Any other thoughts, guys, that you have so far? Yes.
Hello. Can I ask one question? Okay. When it comes to preparing the financial statements, I don't know how mature artificial intelligence is so far, because we've been dealing with many of technology companies. And there are two aspects to that, making a financial statement, which looks like very challenging even today. One is the data cleansing. So, you know, we have multiple sources of data in various systems, which needs to come together to make the financial statements for reporting purposes. And that if data is not cleansed, then obviously garbage in will result in a garbage out, one. And the other aspect is the information which is not there in any system. Typically in the financial environment, you have overseas information or adjustments coming in. How far? Because every time you speak to a technology company, in their initial meetings, they show you rosy pictures, like, you know, leave it to us, we'll do this. And it simply, the first session when we start implementing, it's come to how do you group this? How do you map this? And where is the data? Your data is not there. The source is not reliable. So at the end, we end up making things in Excel for reporting. I don't know if these artificial intelligence companies prepare their financial statements automatically or in Excel.
Very good question. Very apt and very relevant. But I have some examples, and if time permits, I'll take you through how RPA is used, because, you know, most of the finance is about processes. Accept it or not, it's not about experience, it's about processes. And how do these processes can be automated through the third layer of artificial intelligence we spoke about after data and NLP is RPA. I'll take you through some examples. I've got some case studies, you know, what can be done, how much time can be saved, what is a business case, and so on. I hope you guys can hear me properly. Okay. So, you also had some question? Yes.
Hi, Karthik. See, as a consultant, as a service provider, we always try to help the client to be future ready. That's one point. And as an individual, okay, we always, professional always try to learn the technology and new things which can enhance our capability to either be a competitive or to serve the market. Now in this case, whatever I see, it's a present. And we as a professional has to slide where the opportunity is going to arise, the future. After this, what? Because I feel that most of the developed country, most of the big organization has already adopted this. And those who have not adopted AI, machine learning, robotics, I think they are a little bit lagging behind. But to make future ready, what next? After that, what you are predicting? Because it's evolving. Every day, new things. Today, I try to learn something. Tomorrow, it will be outdated. What next?
Very good question again. So, this is the landscape. I slightly disagree with you that most businesses have adopted it. My sense is even most progressive organizations with a $2, $3, $4, $5 billion. I'm talking about back home. I'm also talking about US companies. And I'm not talking about some of the very large giants like Microsoft, Google, Apple, and those kind of companies. But most of the other larger companies, the implementation rate of AI, my sense is it's not more than 5%. Average. In India, back home, we having taken up some enterprise projects and having dealt with, I'm going to take you through some case studies of some manufacturing companies. Our sense tells us people are still grappling with the basic SAP system and getting things in order. Leave aside the artificial intelligence. And yes, people have bought 2 or 3 bots to start with. Let's see how does it work. And these bots, they work 24/7, 366 days. So they have loaded a lot of things. They've got a lot of things done out of the bots. Even there are OCRs, etc. that have been bought. So your general invoicing, hard copy invoicing, that can also be captured by the machine and read by the machine through OCR and IQ bot, as we call it. So some of those things are being done, but very nascent, not more than 5% at the general level. Not more than 5% is my understanding. So in my view, it's going to be first implementing some of these things. Like IoT is not fully out there. It's not even 2%. It's not even 1% IoT today. Blockchain, I don't see that operating on the ground. Very soon it is going to come, but I don't see it coming on the ground as fast. It'll take another 3 or 4, 5 years to do that, because you also need skilled people to adapt that. And again, by the way, very big demand therefore for skilled force who can understand business and who can understand technology. Very huge demand for such people. But after this, to be honest, it's going to go more and more into technology usage. We don't know where it's going to take. Maybe the whole spectrum is going to change to somewhat different. Presently, it's talking about business processes, etc. It's going to shift towards, as I said, AR, VR. It's going to shift towards experience building. What next also is, after you guys have given your repetitive activities as finance professionals, you would understand business much better. How a human capital function is functioning. How a production manufacturing system is functioning. What are the other key important elements within a production system that can be done, and how a finance function can very well be integrated within a production system. I think integration of technologies, and that's going to come up, by the way, integration of technologies and integration of functions, and one of the roadmap I will show is going to be the key after that. And developing a center of excellence for artificial intelligence and the entire host of digital and artificial intelligence technologies is going to be one of the very important steps in the maturity of AI systems, and I'm going to talk about that in this session itself. I'm not going to spend much time on this, but the core internal auditor's role is internal controls, process improvement, controls monitoring, governance, risk, sustainability, compliance assurance, system people, and process assurance. If that is the role of an internal auditor, and going back to the fundamentals of an objective assurance and consulting activity designed to add value, and auditing also is about the assurance on the state of affairs. Each of these elements you can actually use RPA and other artificial intelligence technologies. Same is with the finance functions, financial governance, reporting, tax filing, transaction processing. All of these areas you can actually use artificial intelligence in the entire spectrum. Again, I'm not going to spend much time because I think we've got a clear message that there's only 5 to 10 minutes pending. There is a business case for AI in business and AI in ANF. Very quickly, it transcends human limitations. I just give one example. Today, we have in our course in relational analytics, we have understood 2 or maximum 3 dimensions. X plus Y is equal to so, x plus y is equal to 2x plus 3y is equal to so much. So therefore, those simultaneous equations and linear programming, at best we have gone to 3 dimensions, x plus y plus z. I don't think human mind can actually take up beyond 3 dimensions. I don't think we have got the human capability to do that. And machines can actually study thousands of variables at one go. And how your output or how the ultimate outcome is going to depend on various variables is what the transcending of human limitations is going to help us. And I don't think anything else needs explanation. I want to say just that these are the myths. These two are the actual challenges, integration of technologies and limited skill sets, because we don't have enough skill sets. Actually, irrespective of the amount of production, India produces largest technology professionals in AI and various domains, but it's still limited to what is needed in the world. Everything else is just a myth. Everything else is a myth. So it's wrong that it's going to lack human touch. It is going to give you immense amount of human touch. Conversational artificial intelligence, along with human beings, together can give you very good experience. Much better than what a human being in a call center can give you. Again, I'm not going to spend much time, but here I've said that actually this is being used. Drones for, I have traveled in my early days, back 20 years ago, almost 20 hours using couple of flights to reach to a plant location in Tuticorin. A part was in train, there were 2 flights. There was no direct flight from Mumbai to Madurai. Mumbai to Chennai, Chennai to Madurai, and from Madurai train to Tuticorin. It took us 22 hours to reach, always. And what did we do? We went to just take a dip measurement, physical verification. What is the quantity? Heap measurement. And that too was just by way of estimation. Today the drones can actually go and take the exact conical measurement and tell you that what's the possible estimate of the materials lying. So that's physical verification where it can be used. RP I'm going to talk about a little bit. Conversation I have spoken. Data I have spoken. This is the future that you were asking about. Data first, process transformation second, integrate functions. Today the functions have become isolated. The HC guy comes and tells, I give everything to my team. I don't take decisions. Everything is decentralized. Finance function will come and say, no, I keep everything to myself. I'm going to be approving almost every expense in my function. These two are different functions. They come from different backgrounds. Life in a company is not more than 5 to 6 years. So therefore, they keep talent also keep changing the company. And how do we integrate with a common theme? So that is integration of functions. Integration of technologies, because these technologies are so different and complex. How do they talk to each other? How do they talk to each other? And last is AI COE. You need to have one body, which is center of excellence, which need to evaluate all the projects, all implications. And I strongly recommend that both the audit leadership team and the finance leadership team should be a part of this AI COE to play their different roles. So internal audit as a security, governance, controls champion, and finance as an ROI and financial reporting champion. So I just will take, if I have another 2 or 3 minutes, 2 or 3 minutes, if you can load the other presentation on RPA to answer his question on how it is actually being used, whether it is used, etc. Can you go next, please, quickly? Sorry. So, just very quickly, re-engineer, standardize, integrate, automate, robotize, I call it. Robotize the processes. Let the bots carry out repetitive activities. Let human interventions be applied at a level up. And let the creative human energies be applied in strategic high-impact areas. That's the theme. We spoke about it earlier at the start. The myth is that it's an expensive proposition. There's lack of human touch. And machines will take away human. These are all myths. And what is the real benefit? You have a common organizational theme when you get a chance through implementing an RPA. RPA is one such example I wanted to give you. In artificial intelligence, there's a common organizational theme across all processes. It gives you that opportunity for the functions which have evolved in a very, very siloed manner. Integrate processes, integrate technologies, and I'll just quickly come to the economic value proposition. And just to answer your point, license cost plus the implementation cost the first year, because in the first year you're going to spend for license and you're also going to spend for implementation. You have to configure bots, right? To do that, the cost that is involved is much lesser than the cost that you're going to save. Means there is a benefit from the year one itself. Come year two, you don't have to spend the implementation cost, but you have to spend the maintenance cost. And our experience tells us it's less than 40% of the cost. 40% of the cost saved. Whatever savings you're doing, you're only going to spend less than 40% from the year two onwards. And therefore, there's a very solid economic value proposition. And intangibly is going to give you process objectivity, common organizational theme, overcoming silos, integration of functions. Also, ISO, QMS, CMM, all of these are naturally taken care of in an RPA. I want to very quickly show you. These are some examples. While we don't have much time, let me tell you, even processes like pharmacovigilance in a pharmaceutical company, a research and development, and a pharmaco is a very, very complex, very, very knowledge-based process. Even in that function, we were able to automate 60% of their activities. So I'll just give you one example of a credit limit updation. So let's say in a multi-manufacturing, multi-plant company, which is manufacturing, let's say cement, and there's a credit limit process. So spokes from all over India will upload the credit limit update request via a portal. The bot would download various reports from SAP, validate the customer eligibility, credibility track record as per organization's policy, send to the eligible approver, take that approval, upload it in SAP. That is what a bot will do. What has happened because of that? Reduction of 70% of the time, of 70% of the people are freed from this activity. There is a near about timely payments that is happening, timely compliances, and the proposition is here. The 50-minute time a person is going to spend now 6 to 7 minutes and 21 man days of saving for one payment cycle. So like this, of course, I'm leaving this presentation behind, but for various processes like critical vendors, various other processes like sales orders, we have basically gone in and given even the financial set service process that you spoke about, financial statements, how does it actually work? So many man days savings, so many regions covered, and all of these are covered as a part of this business case. So I will leave this behind. If you guys have any further questions, happy to answer. There are various live courses that can be done on this, and including the low-code, no-code platforms. I would strongly encourage that some of these can be studied. And let me tell you, back home, most of the companies are actually implementing, starting with at least 1 or 2 of these licenses and at least seeing and experimenting and doing trial and error. I would highly recommend at least some amount of trial and errors being done by you guys in your respective functions so that some of these potential can be really explored. Thank you so much.
Hi, Karthik. Good afternoon. I want to talk about 2 things. One was the low-code, no-code. Just to give an example, I'm sure all of us use Microsoft Outlook. There's a rule-based function which is available in Outlook where you can send the emails that you're receiving on your inbox to particular folders, or you can keeping it from red to unread, and those sort of functionalities available. So that's an example of low-code, no-code, which is available at our own disposal, readily usable with us. The other question that I want to touch point, this was a statement that I wanted to make. The question that I want to ask you, Karthik, is when you mentioned about AI having the ability to look at more than 3 dimensions, the initial training portion or the machine learning part of an AI system will require human beings to train it, because only then it starts building on the neural network so that it becomes able to take decisions based on the repetitive decisions being trained to it in the first instance. So in that case, again, a human being is necessary for training the AI bot.
Feeding the rules in a
Yes,
machine.
the rules. So in which case, don't you think there's going to be a challenge, because very few people across the globe would have the vision or the ability to look at those sort of technologies, because right now not everybody even understands the concept that you mentioned about 2-dimensional and 3-dimensional, let alone train a system in that regard. Thank you for that.
Should I answer that very quickly? So there are 3 types of professionals in technology. There are developers, there are solution architects who are above developers, who understand business much better than developers. Developers only understand code. So developers, the solution architect, overall who would architect a solution, and third is business analyst. Business analyst also understands technology but doesn't understand the coding to the last. Solution architect understands both. And these guys, the business analyst will basically document what is the business expectation. Solution architect will architect a solution and developer will go out and develop it. Let me tell you, most of the most complex solution, all these business models that have evolved of Zomato, and I keep taking those examples, even a Google map, okay? Some of these examples that have evolved, that shows us a lot of intelligence that has gone into that system. How has that gone? Virtually, the most complex systems can be programmed. Remember, if all that you have here can be fed into the machines artificially, machines can do most of the things that can relieve you. I come back to that statement of mine. But it is very, very possible to do that.
Hello. Yes. Hello, Karthik. You've been through, I guess, a number of areas in terms of financial statement preparation, I guess the artificial intelligence. My question is from the practical experience perspective. How long, or perhaps, how many years we like to see that one system provider, let's say Oracle, would come back and, these are the system changes, we will offer you the artificial intelligence, RPAs, and everything else. Because, as you said, like 5% of probably the financial institutions have only adopted this. When do we see it? It's happening, one-stop solution.
I think it's going to, from now till next 3 or 4 years, I see a very big change. At least with my experience in India, it tells me that nearly the most critical dependent processes, very important ones, will be, at least 40-50% will be taken care of, at least next 3-4 years. It will be done through bots, and I think most of the companies are taking towards that step right now by starting with at least few things. But I also see that some of the ones, and when I said about 5%, that's a general average that I spoke about. But I also see some of the very, very mature, technologically matured companies, particularly I see pharmaceutical sector, because there are a lot of quality and process requirements. I see that most of them have taken up enterprise automation projects, because they believe that their industry is getting into more regularization with US FDA, etc., expanding. So there, I would say nearly 60-70%. And let me tell you, in a period of, if the company is progressive and serious, in a period of 2-3 years, nearly 60-70% of the processes can be automated across the company. Now, if everybody starts doing that, probably we will not have enough manpower to deal with all this. But when the requirements come in, they come in, and suddenly even now there's a huge, particularly post-pandemic, there's a huge demand. Almost every developer, whom we have recruited, let's say 8 months back, he comes back and is getting almost 2.5 times the salary. And that's how the market is picking up back in India. And also globally for that matter. Some of the countries like US and UK are pretty much advanced. So US is, of course, the biggest market, but India is also a very large market. UK is also a large market. So where, I would say, in a period of 3-4 years, you will have a lot of changes coming up. In pharma and some of the other regulated industries, including financial services, some of these, I believe it's going to be, in next 3-4 years, they're going to automate nearly 60-70% of the processes from a process standpoint. And of course, experiences and all of these are ever evolving, experience building, and therefore new things are going to keep coming. It is never going to stop at a given phase that, okay, fine, we've implemented the project. Every time in technology, once you've developed something, something else is going to come up and emerge. So I hope I've tried to answer. Thank you so much. And I really feel very happy interacting with all of you, and I really believe that we'll get some more opportunities in the future, of course, subject to pandemic, to come down and interact with you guys. Thank you so much.
Good afternoon, gentlemen and all the ladies. So, CA Karthik Radia, you aptly started by bringing out our reservations which we had that AI will replace the auditing and blockchain technology may alter the requirements of getting the audits done. But with the spectrum of all the AI possibilities and the related tools you took us through, it helped us recall one important thing. In the middle of difficulties lies the opportunity. So I think this is the opportunity which we can take, and instead of getting afraid of the AI, it's time to reskill us. And in your words, I think it's time to level up. So without further ado, we'll close the session here, but with the most important thing. I'll request our immediate past chairperson, CA Ajay Kumar Chetuvatti, to come on dais and present a memento to our speaker for his valuable contribution today. With that, I'll hand over control back to our Arun Matthew. Arun, can you please take up the control? Thank you.